What is this tax super deduction and how can I make use of it in my property company? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. In the Budget 2021, the government introduced something called a super deduction. Now this super deduction is basically, rather than claiming 100% tax relief, we can now claim 130% tax relief. So that is great if you're looking at investing in certain things in your property projects, because now rather than just getting £100 tax relief, we now get £130 tax relief. So that's a really great opportunity. So let's have a look today at what is covered, when and how. The time period that is covered by this new super deduction is from any time now all the way through to the 31st of March 2023. This claim is for companies and companies only, as it falls within the Capital Allowances regime, and this is where you'll be making that super deduction on your corporation tax return. The super deduction offers a first year allowance for any capital allowance in your plant and machinery classification. So this is a great way of purchasing something that you were probably intending on maybe doing anyway, and you're going to get this extra benefit. As we approach March 2023, there's obviously going to definitely be an advantage of making sure you buy it ahead of the end of March so that you can continue to get this super deduction. The key thing here is going to be what date you actually purchased the item, and if it's after that period, you won't be able to get the deduction. So if you are looking at buying something, then this next 12 months may be a beneficial time to purchase it. There are still all the normal capital allowance allocations as well. So you still have your annual investment allowance, first year write down allowances, writing down allowances. All of these things still apply. And check out the video on capital allowances, which go into a little more detail on what all of these different things are. Today, I really wanted to focus on the super deduction and what you can be claiming it against. Before I jump into what you can claim against, let's just very briefly cover what capital allowances are. And this is basically the same as what is known as depreciation. Now, depreciation is where we have an asset. Let's use a computer as an example, and I spend £1,000 on this computer. In my company accounts, I will deduct an amount each year, let's go with 25%, to say that computer is going to last me 4 years, and each year I'm going to write down that computer by £250. So over 4 years it becomes worthless, which is probably relatively true for a computer. Now, because that's depreciation, the taxman says, I don't like that because I'm not in control of it. So what the taxman says is, we're going to ignore depreciation. We're going to add that back when we do your tax calculation. However, what we will allow you to have is something called capital allowances. And this is basically similar to that depreciation calculation. However, there's different rules associated with it. So let's stick with that £1,000 for that computer and go, well, now, if I've got capital allowances, we've got something called an annual investment allowance. So now, rather than just claim £250 per year, this annual investment allowance actually says I can claim 100% of this £1,000 in the year that I purchase it. So now, rather than having to wait 4 years to get that tax relief, that deduction in my corporation tax, I can get that £4,000 in the year that I purchased it. And that's generally how your capital allowances will tick over. The super deduction has now just made that £1,000 £1,300. So again, it's not lots, but depending what you are buying in your business, there is that opportunity that actually, rather than £1,000, you're now going to get £1,300 off your tax bill rather than just the £1,000. So what are we classifying as plant and machinery? Well, most things that you're going to be using in your business are going to fall within, hopefully, this regime. So the type of equipment that we're going to be looking at are things like maybe computer equipment, maybe iPads, maybe mobile phones, smartphones. There's potentially going to be all of your equipment. So if you're getting expensive laser measurers, or you're getting drills or ladders or cranes or anything that is of some sort of substance in your property business, all of these sorts of things will potentially qualify for this super deduction. There's things like office chairs, desks. So if you're refurbing your home office, which you're putting in place for your property business, you may be able to get a desk, some shelves, a chair, a computer, a printer. All of these sorts of things would fall within the plant and machinery category, and you'd be able to then get your super deduction. So if you say spend £5,000-10,000 on getting all these different things for your property business, then you're going to be getting 13,000 tax relief, not just the 10,000 that you spent. Obviously, in this case, you do have to spend the money. It's not speculative. You need to have your receipts. You need to have your evidence of what you have spent on what items. So it's not just I'm going to spend it, it's I've actually physically put the cash down. Now, when I say cash, that could be on a credit card. It could be you've got some money from a loan to make these payments. So it's literally you've got the receipt, you've got the invoice, you've got the asset in the business. The actual financing side of things is arguably irrelevant from a capital allowances point of view. That is kind of a separate topic of discussion. One other area that you may be able to do it is where you've maybe got some commercial property or serviced accommodation where you can claim capital allowances on some of the different areas of your property investing. So things like solar panels, potentially things like your integrated capital allowances, your air conditioning, your lift feature. There's some of these different features in your buildings which may be able to have capital allowances. So this is probably a topic to have a conversation with your accountant on, to make sure you can see what you are doing, and if it's a project that's going to be lasting over a number of months, you may need to make sure you're purchasing things before the end of March if you think the capital allowances is going to be available for you. To make sure you get it in before the end date of the super deduction, so that you can be just taking advantage of this super deduction, especially if it's a larger item where you're spending 10, 15, 20,000 on it. That will definitely have a bit of an impact on your corporation tax for going forward. The super deduction may or may not have an impact on your capital allowances and on the taxes of your business, but it's definitely worth something considering. And if you are going to buy even just a small item, make sure you buy it before the end of March next year in 2023, so that you're taking advantage of this additional 30% tax relief that we can get at this point in time. Hopefully today you've discovered what the super deduction is and how this can be used when claiming your capital allowances. If you have any questions, then please do leave a comment and we can cover these in more detail soon. Please like the video and please do subscribe to the channel, and let's make tax less taxing.